Some people will say that your house is an asset, basically meaning that it can make you money. I'm here to answer the question, is your house really an asset? Right off the bat, you guys go ahead and hit that like button that supports my channel. I appreciate that very much, especially if you want to keep getting more updates and information on real estate investing, buying a home, selling a home, and also finance. Thank you guys for that very much. What some people say is they say that real estate values always go up. So in 5 years from now, I'm gonna sell my house and make some money. And when I make that money, that proves once and for all that my house is an asset. But is that really true? Robert Kiyosaki's book, Rich Dad, Poor Dad, teaches us many great lessons. One major takeaway is that your house is not an asset. But wait a second, I know plenty of people who have sold their house and they made money, therefore their house is an asset, right? Well, let's take a look at the 2008 example. So back in 2008, a lot of lenders gave out subprime mortgages. And basically what that means is it's mortgages for people that are at high risk, typically people with lower income, lower credit score, and probably have a few dings on their credit history. Now this paired with ARM, adjustable rate mortgages, was a recipe for disaster. Basically, an adjustable rate mortgage is a variable rate mortgage, meaning you come in at a teaser rate on your monthly payment, which is a lower rate. However, that rate goes up as interest rates go up. Initially, many of these people who took out subprime loans did have concerns. They asked their mortgage broker. They said, now these monthly payments are low, but what do I do when the payments get higher? And especially, what do I do if the payments get so high that I can't even afford the monthly payment anymore? Most of these mortgage brokers told their clients, hey, don't worry, the price of real estate always goes up. So if the monthly payments get too high, you could go ahead and refinance to renegotiate the loan and go back to lower payments. It is no surprise that when these payments got too high for most owners, they went back to the mortgage broker and tried to refinance. Unfortunately, at the time, the prices of real estate went down and interest rates went up. So there was no way for them to refinance to make those monthly payments lower. This was getting pretty stressful for a lot of people. The payments were going up, they couldn't make the payments, and the value of their home was going lower and lower. And the problem here was that the value of their home was so low that even when they sold their house, they couldn't pay off the debt that they took with the bank to purchase the home. These were tough times. People in this situation basically had two options. One was a short sale, which basically meant sell the home, and even if you still owe some money, the bank will call off the rest of the debt and just walk away. The second option was foreclosure, which basically means that the bank takes the property away from you and you get kicked out. At the end of a foreclosure, if the person doesn't leave, there's even a sheriff's lockout where they change the locks on the door and a sheriff comes to your door to kick you out of the house. These people truly learned the hardest way that your house is not an asset. Currently, in October 2020, people are similarly facing difficult financial times due to this outbreak. They're having trouble making their mortgage payments. Fortunately for them, this situation is a little bit different. There is a hold on foreclosures at least until 2021, until further notice. I also have a feeling that they're going to continue to extend this beyond January 2021. But the real advantage here that makes this so far at the moment different from 2008 is that home prices are at an incredible all-time high and those interest rates are low. People can use a few strategies to keep their home even if they're having difficulties. Number one option is if you have a good credit score, those interest rates are low so you can refinance the house, which possibly can mean for you that you'll have lower payments. And that can help you if you're facing a tough situation now. Option number two is that you could sell the house, and instead of facing some sort of a hardship, you could sell the house and profit, move on to buying a smaller property, buy a home in a more affordable area, or keep that money and rent something that's less expensive. Not to mention that rents went down, especially in major cities like Los Angeles, ever since this outbreak. So that's one strategy people can use. Okay, Jason, so first you're telling me that your house is not an asset, and now you're telling me that some people who are having financial troubles can sell their home to make money and help them in a hard situation. Doesn't that make their house an asset? And in my opinion, no, that still does not make your house an asset. The house that you buy and live in is not a stock. It shouldn't be something that you buy just to wait and watch the value go up just so you could sell it and make some money. When you buy a house, you want to make sure that you want to live in it, or else you'll be miserable. You want to make sure that it's close to the stores that you like. You want to make sure it's close to the people that you spend time with. You want to make sure that it's in a good school district. You want to make sure that it's close to the beach if you like the beach. Yes, these things can mean that the home is worth more, but it should be more important to you as an individual when you buy the home. Look at it this way. When you buy a home and you fill it with your belongings, with your furniture, with your pets and your family, it becomes an emotional thing. It's a place that you spend all of your time and you create memories. That is not a stock, that is not something that you use to make money. Now, when you take all these things out of the home, when you take out the furniture, when you take out your family, when you take out the pets, now it's just a commodity. It's just bare walls and floors. Now it's ready to have buyers come in and take a look at it, and it's ready to be sold. And hopefully at this point, you have another place lined up that you're ready to buy, you know you can afford, or best case scenario, you already bought. At this point, your house is a commodity. Your house becomes your personal space, and it is for these reasons that I say the home that you live in is not an asset. Now, with that being said, there's definitely nothing wrong with taking advantage of high home prices to sell your home when the value is high, to either pocket some cash or move into a bigger home, or like we may be seeing soon, to help you out in a difficult financial time. Do yourself a favor and don't buy a home solely on the fact that 5 years from now, I'm going to sell it and I'm going to pocket a lot of money and I'm going to be rich. There are a lot of things that get in your way, including capital gains tax. In summary, your house is not an asset. However, it is perfectly fine to sell your house when the timing is right, when you and your family are ready to and want to, if you happen to also make a gain. Thank you everybody for watching. Don't forget to hit the subscribe button so you can keep getting videos like this. Hit the notification bell so you'll know right away once I post a video like this, you'll get that update. I post videos like this once a week, and we'll see you guys at the end of this week. Thank you so much.